5 years ago, Sarah and Jake started an escape room. By all accounts, things were going great. Jake was the designer, the dreamer, the escape enthusiast who followed his passions and decided to design puzzles galore for escape rooms that he had always wanted to see. Sarah, his friend and fellow enthusiast, was the business side of things, and Jake was perfectly happy with that. She worried about keeping the lights on, about making sure that the employees were paid, and about all those money words that he didn't really make sense of. And this was working well for them. As their escape room grew in popularity, they made more rooms, and customers would not only come back, but they would bring their friends, those friends would spread the word, and things were definitely looking up. And as a result of this, of course, things got busier and things got more stressful, especially for Sarah. It was a lot to take on. So Jake proposed that they get help, and Sarah agreed. They decided to hire a bookkeeper, someone who could take on a lot of the financial load for Sarah. And for a while, things were looking good again. Sarah was a little less stressed. The business was still doing well, except after a couple of months, Jake couldn't help but notice that for some reason, they could never seem to hold money in the bank account. They always seemed to be strapped for cash. No matter how good the sales were, no matter how many bookings they had, things financially were just always tight. When Jake asked Sarah what she thought, Sarah assured him that the bookkeeper was doing their job and it was probably just a timing thing. Still, the problem persisted, and Jake thought at least they should see some sort of financial statements from the bookkeeper. Maybe they could figure out the problem together, figure out the pain points of what was going on in the business. But when Jake asked Sarah if she had asked the bookkeeper, Sarah said that the bookkeeper was busy. In fact, that was a constant problem. The bookkeeper never seemed to be able to get them financial statements. The bookkeeper never seemed to have time for them. They were always swamped or sick. Jake was getting very worried that the finances weren't up to date, that he had no idea what was going on in the company, and nor did Sarah. And it got to a breaking point. One week, Jake realized they might not be able to make payroll, and that was unacceptable to him. He loved his team, and the idea of not being able to pay his employees was just devastating to him. So much so that instead of going to Sarah this time, he decided he would give the bookkeeper a piece of his mind. And Jake did exactly that. Phoned up the bookkeeper and proceeded to go on a rant of epic proportions. He didn't get far, though, because the bookkeeper interrupted him, confused. The reason the bookkeeper hadn't been doing their job properly is because they had been doing no job at all. The bookkeeper informed him that 3 months after being hired, they were let go by Sarah. They hadn't been their bookkeeper for almost a year now. This revelation deeply confused and disturbed Jake. And when Jake finally managed to get a hold of some financial statements and bank statements and look into it himself, he confirmed the devastating truth. It wasn't the bookkeeper who was to blame for their financial troubles. It was Sarah. And worst of all, she had been stealing from the company for almost the better part of a year. The financial loss to the company was devastating. But even more devastating was that loss of trust that Jake had in someone he thought of not just as a friend, but as a family member. Now, some of you may have just listened to that story and thought to yourself, oh my God, that is such an awful story. I can't believe that happened. That could be happening to me right now. Is there a fraud going on in my company right now? Oh my God, I gotta go check. Everybody's against me. Everyone could be stealing from me right now. To which I say, calm down, take a deep breath. Today we are here to learn, and we are going to get through this together. However, I am betting that most of you listened to that story and thought to yourself, I am so glad it didn't happen to me, and I am so glad that I have a team that I can trust, and a healthy work environment, and a fun time all around. And that is great. That is something you should strive for in your business. However, I'm gonna need you to go way closer to the panic side of the line, because the truth of the matter is, we do not panic about fraud enough. We are not concerned enough, and somehow we consider ourselves immune to it, when in fact, the exact opposite is true. The fact of the matter is, organizations lose approximately 5% of their revenue to fraud each year. And these numbers come from the Association of Certified Fraud Examiners. This is from a report called Report to the Nations. I'm going to be referring to it a lot during the presentation, and I encourage you to go check it out for yourself. So like I said, organizations lose about 5% of their fraud. Now, that might seem like a small number, but if you consider small businesses, any number can be devastating to them. And when you consider that the median loss to organizations is around $145,000 per fraud case, and that the average loss is $1.7 million, think about losing $1.7 million. It does not sound fun, does it? In fact, it sounds like a very quick way to close your business. When we think about fraudsters, we tend to think of somebody anonymous and hooded, sitting behind a computer and plotting how to bilk you out of all of your money. And certainly, those individuals do exist. And yes, some people simply want to watch the world burn, especially certain puzzle designers. The fraud that I am talking about hits a lot closer to home. It is not some anonymous masked individual whom you will never meet. It is our employees, it is our business partners, it is our family and our friends, our loved ones, people that we would trust with everything. Anyone is capable of fraud, and you cannot take the risk that will not happen in your organization. What I'm hoping to talk to you about today is not just how to spot fraud and common schemes that are going on, but also how to prevent it. Some practical tips about how small businesses, escape rooms like yourselves, can help to avoid and mitigate the risk of fraud within your business. So how does it even happen? How do people that we trust and love decide to engage in fraud and steal our money and possibly eliminate any sort of good relationship they've had with us? Well, for that to happen, we're going to talk about something called the fraud triangle. It is the concept that in order for fraud to occur, 3 things have to be in place. The first arm of the triangle is called perceived pressure. This pressure can be internal. We have to meet our quota. We have to please the shareholder. It can also be external. I have to pay my rent. I have to send my child to an expensive school. I have a gambling addiction. These are pressures, financial pressures, that we do face every day. The second arm of the triangle is rationalization. It's that process we go through in our heads to make the decision that we are about to make, not just the best one, but the only one. We do this every day in very small ways. For example, after this recording, I'm going to eat some pie. Diabetes risk be damned, because I earned it. I worked really hard and I am really stressed and I deserve that pie. The same thing goes for fraud. Right? I deserve this money. I'm owed this. The company has never paid me enough. They are never going to appreciate my work. I'm just borrowing the money. I will put it back. This is only going to be a one-time thing. Rationalization. The final arm is opportunity. How easy is it for somebody to actually commit fraud? Despite my story, a lot of the times bookkeepers are the perpetrators of fraud because they have the easiest access to it. They have access to all of the finances. People who work cash, right? The cash is right there in front of them. How easy is it? And opportunity is what we focus on from a fraud prevention standpoint. I can't control what's going on in someone's life. I certainly can't control what's going on in their head, but I can control how easy it is for them to perpetrate any sort of crime. When it comes to small businesses, there's all sorts of fraud schemes out there. For escape rooms in particular, I've put a few up here. I'm not going to go into huge detail about them, but I'll detail a couple of things here. Billing schemes, making up fake invoices for your vendors to be paid, and when in reality it might be the fraudster being paid. Check and payment tampering. Checks are still very much a thing in our world, especially in the US, and it's so easy to alter them. Yes, even computerized checks. Check and payment tampering is one of the highest forms of fraud out there. We also have non-cash. If you have inventory on your premises, is someone possibly stealing it, selling it for themselves? Who knows? Even time can be an asset that is being misappropriated. Are your employees punching in when they're supposed to? Are they getting someone else to punch in for them? Are they leaving early? That is time that you are paying for, and they are technically committing fraud. Cash larceny and skimming. If you have cash on your premises, this is always going to be a risk. Payroll schemes. It could be either paying someone more than they actually should be getting paid, or it could be making up a whole new employee entirely who is simply a fake person. The list goes on, but these are some of the most common ones that you see in small businesses and ones that I would consider escape rooms to be more at risk for. When it comes to detecting any sort of fraud going on, there are things we can look for. Red flags, if you will. The first set of red flags to look for are behavioral. These are the easier ones to look for. For example, if someone seems to be living beyond their means, do you notice that someone is suddenly showing up to work with more luxury items? Maybe they bought a new purse, maybe they bought a new watch, maybe they're paying for everybody's drinks, maybe they even showed up with a new car. And for the life of you, you can't figure out how they are affording it if you know enough about their life. Could Could be that they won the lottery or something, but who knows? Related to that is financial difficulties. Is someone very stressed out about their financial situation? Often this works in conjunction with living beyond their means. Do you know someone who was in financial difficulty who is suddenly not, and you can't really explain why? On its own, might not be anything, but in conjunction with other red flags, might be something to look into. The big one for me is control issues. Fraudsters need to have control over their environment. Is there an employee in your business who never lets anyone touch their stuff, touch their work, help them out in any sort of way? Do they always insist that they can do it themselves? Yeah, it could just be a control freak or a workaholic, but it could lead to something more nefarious as well. Related to that one is irritability or defensiveness. For the most part, actually, fraudsters are very friendly people. They have to be. They need to earn people's trust in order to keep doing what they're doing. They need people to like them. However, when you get into their environment, when you try to take control of things that they are doing, they start to get a bit irritable. Is somebody particularly defensive when you offer to help, or insist they go on vacation, or insist that you can cover for them? Again, might just be a control freak, but might be something else as well. In addition to behavioral red flags, there are financial ones you can look for too. And this is for financial occupational fraud in particular. If you're noticing, for example, sudden increases or decreases in expenses or revenues that you can't quite explain. Are you doing a lot more returns than you normally do? Is suddenly your payroll skyrocketing and you can't explain why? Are you spending an awful lot on miscellaneous? Is that where it's getting categorized? Could just be bad business practice, but you need to dive in to figure that out. Do you have constant challenges with the bank balance? Now, I realize I'm talking to escape rooms here, and challenges with cash flow are always going to be a thing. But is it so bad that even during your good times, your peak sales periods, that you seem to have the same problems? Something to look into. Do you seem to have a large amount of money owing to people? Is there suddenly a lot of shareholder draws? I'll get to this later, but this always boils down to management review, reviewing your financial statements to look for these discrepancies. And then there's your cash floats. Are there discrepancies when you count it at the end of the night? Back in my fast food days, we weren't allowed to be $1 over or under in our tills at the end of the night. And if we were, there were concerns that somebody was stealing money. How much are your cash floats out by? Is it $5, $10, $20? Could it just be that people can't count money, or could it be that someone might be skimming off the top? In isolation, these red flags might not mean anything. But if you see even 2 of them, 3 of them, 4 of them, and things aren't looking good for your company, maybe you suspect fraud is going on. If you do suspect you have fraud within your business, and you are panicking and wondering what to do next, first, stop, don't panic, take a deep breath, and gather your evidence. Start to look at the finances. Start to observe people. Start to write down what you are seeing. Question, if you need to, some employees, but usually keep it to yourself. If necessary, engage the help of a professional. You can ask your accountant or your bookkeeper, depending, but I would recommend finding a forensic accountant if you truly think that something nefarious might be going on. A forensic accountant will have not just the professionalism, but also a more objective point of view. And they might actually reveal maybe it's not fraud, maybe there's just some terrible business practices going on that you need to fix. Regardless, they're the ones who will help you to seek an answer. I'm not going to talk about who to go to here because every jurisdiction is different. Find somebody local if you can. Talk to your accountant. Talk to anyone who has been through this before, and they usually will have suggestions for you. Now, that's the detection side of things. And people are always excited to detect fraud. But me, I'm excited to prevent it. Because why detect something if you can prevent it from happening in the first place? And for that, we are going to talk about the most exciting thing in this presentation: internal controls, the backbone of any business. No, not your products. No, not your services or your profits or your shareholders. Forget all of them. They're all losers. It's internal controls that really make a business. I will fight you on that. Of all the frauds that the Association of Certified Fraud Examiners surveyed, 32% of them occurred because of a lack of internal controls. An additional 19% occurred because they had internal controls, but they overrode them. They just turned off all their 2-factor authentications, right? Because who cares? And then an additional 18% was due to a lack of management review, which technically that's not an internal control, but I consider it one. Over over half of the frauds in 2024 occurred because of a simple lack of rules that people were following. So let's get into it, because this is the real exciting stuff. Now, when figuring out what internal controls you should have in your business, you kind of have to scale it, right? Most small businesses are not going to sink a lot of money into some expensive anti-fraud software out there. There are more practical things they can do, though. For one, a code of conduct. If you don't have a code of conduct for your employees, get one written out. Make sure that your employees know what rules they need to follow and what the consequences are if they do not follow those rules. It is just a basic thing for every business. Related to this is the documentation of their job duties. Document, write it down. If there's one person who is in charge of a particular process or a particular job in your business, get them to write down step by step how they do their job, even factoring fraud out of it. If that person were just to suddenly disappear for some reason, you are screwed. No one else knows how to do their job and they didn't write it down. So document the job duties. This just helps you out, and it will help you out in determining whether maybe you need to change some processes going on. If you're writing out these processes and you think, well, that doesn't make much sense, when you ask why they do something a certain way, and the answer is, because I've always done it that way, that's your note to actually look into maybe changing the process, because that should never really be the answer. Also, make your employees take their vacation, yourself included. This is not just an ethical thing, although yes, absolutely, you should give your employees vacation. It's also a fraud prevention tactic. Remember, a fraudster needs complete control over their environment. What happens when they go on vacation? Somebody has to cover for them. And the second that somebody is looking at their work, there is a risk that they will discover what the fraudster is potentially doing. If you ask an employee to go on vacation and they are insistent that they don't need to, well, it could just be that they are a workaholic, but it could be pointing to something a little devious. Try as much as possible to have a separation of duties. Now, I realize as well that I'm talking to escape room businesses, and some of you might just be 2 or 3 people operations. Again, try to scale it for your business. If you're writing down someone's job duties and see that Bob is in charge of receiving the mail, entering into the bookkeeping system, paying the bills, writing the checks, that's just one set of eyes on things. You want at least 2 sets of eyes on things. Whoever is entering the bills into the accounting system shouldn't be the one signing the checks. You need people to review these things. Same thing with cash. If you have cash on your premises, who counts it at the end of the night? They shouldn't be counting it alone. You should always have at least 2 people counting the cash. Another thing as managers and business owners you should be doing is just reviewing your financial statements, reviewing your bank statements. And even if you don't understand everything that's going on, even if you can't do it every second of every day, and you shouldn't, that would just be way too much time. If you give the impression that you are reviewing work, people will be less likely to engage in fraud because they think that they might be caught. This is known as the perception of detection, and it is shocking how easily that works. I am not telling you to encourage an atmosphere of paranoia in your workplace. Far from it. But people should be aware that their work is being reviewed. It's a normal part of business. Other things that you as owners should be doing financially. First things first, hire a bookkeeper and or an accountant. Not your friend, not your mom, not your mom's friend who has nothing better to do with her life and thinks she'd be pretty good at numbers. No, a professional bookkeeper or accountant. You want somebody with an objective point of view. You want someone who you have what's known as an arm's length relationship with. Yes, they cost money. And yes, you'd probably think you can't afford it. Fraud aside, the time you will be saving to be able to look into your business more and grow your business while somebody else handles the finances is key. Is there a risk a bookkeeper could be defrauding you? Yeah, but for that reason, do your research, right? Don't just hire anybody who is the first person to offer you services. Don't just hire the cheapest person. You will get what you pay for. Ask what other escape rooms are using. Get someone who is familiar with the industry if you can. Once you get a bookkeeper, get an accounting software. If you do not have an accounting software yet, get one. I don't care how good you are at Excel. And get a cloud-based accounting software. If your bookkeeper is clinging on to a desktop software, insisting that it's better, okay, yeah, it probably is, but The benefit of cloud accounting softwares is that they are online and that you can be set up with access. You can have live access to your numbers. And if your bookkeeper is still hesitant to do that because they're worried that you're going to ruin their books and that is actually a really real risk, get viewer-only access. The important thing is that you have access. This is your data. Don't let your accountants hold your data hostage, and you should be, it will allow you to review numbers and to look at reports. Speaking of which, learn to read your financial statements. And yes, I know, you're panicking. It's okay. I know it's scary, but again, take a deep breath. I will get you started on this. This is an income statement. It measures your revenue against your expenses. The more revenue you have, the more profit you have. It's great. This is a balance sheet. This is the one that nobody wants to look at. It has assets and it has liabilities. Assets are things we have. We like assets. Liabilities are money and things we owe to people. We don't like liabilities, but it's very normal for businesses to have liabilities. And if you use all of your assets to pay off all of your liabilities, you'll be left with equity, which is how much your company is worth. A balance sheet measures the overall health of your company, and it is just as important, if not more important, in my opinion, as the income statement. And if you want to know more, go read a book, listen to a podcast, watch a YouTube video, however you learn. Go and learn about it. Once you get comfortable with your financial statements, you will get comfortable with noticing the discrepancies. Look for patterns. Compare periods of time. Are you spending more last year on something than you did the prior year? What is the reason for it? Try to find a reasonable explanation first. Think about not just what was happening in your company, but in the world. For example, a dip in sales in 2021 might be explainable once you factor in the global pandemic that was going on. It might be hard to compare numbers at that point. Did you have more costs of sales? Did you have more building expenses in one year versus another? Is it reasonable? Were you building a room at the time? If you were, does it seem like it cost that much? Did you spend $100,000 on a room with IKEA furniture in it? Might not be reasonable. Get comfortable with your financial statements, because when you do, you will know what questions to ask and you will know what looks strange. In addition to what I just discussed, there are other things you can be doing to help mitigate the risk of fraud. One is anti-fraud education for your employees. You might be concerned that you will panic your employees. Trust me, that's not going to happen. You might also be concerned that it gives them ideas. I don't know, maybe that'll happen, but likely not. The point of education is not to eliminate the risk of fraud altogether. You're not going to do that. The fraud might happen anyway, but what it does help with is getting the fraud caught faster. Remember, your employees are on the front lines. They are going to be the ones to notice things first. If they are able to notice it faster, that means that the impact to your company when that fraud gets discovered is far less. If you are a larger business, you might want to consider an external audit. This is where you hire an accounting firm, usually annually, to do an external audit of your books. It's not going to get fraud caught necessarily. External audits only account for about 3 or 4% of frauds discovered each year. However, what it does increase is that perception of detection. If people know that the books are getting audited, again, they're less likely to engage in anything because they're afraid they're going to get caught. The other thing that it does is it gives you a little bit more reassurance about what your finances are actually made up of and that your books are healthy. The last two are probably the cheapest ones to do. Fostering an environment of collaboration. Engage with your employees. Make them feel included. Get ideas from them. Make this a collaborative environment for everyone to benefit from. And also set a tone at the top. Like I was saying, 18% of frauds occurred because of an overriding of internal controls. Yes, internal controls can feel very annoying. I don't like to have to do two-factor authentication for the two-factor authentication for the password app that I have to log into in order to log into my email. However, they are there to keep me safe. If they didn't feel inconvenient, they probably aren't doing their job. If you aren't following your own internal controls, nobody else is going to either. Set that tone. Follow the rules. You've set them up. It's for the benefit of you and your company, and everybody will benefit from it in the long run. For more about this, especially encouraging a collaborative environment, I would encourage you to check out a talk from Recon 2023 done by Gary and Dino of Hint Hunt. They also have their own harrowing story of fraud, and they have some great advice, more detailed than here, about how to engage your employees to help prevent this from happening. And And they also have some great advice for tracking your finances. It's a cash flow report. They call it Money Matters. It's actually a cash flow report. I don't care what it's called. It's a great template for you to use, and I highly encourage you to go check it out. I know that as small business owners, time and money are a very limited resource, and that even thinking about things like fraud prevention or making your employees happy or reviewing your financial statements can seem like an impossible task. It's not worth putting your employees at risk. It's not worth putting your entire business at risk, and it definitely is not worth putting your relationships with your loved ones at risk. If you find yourself asking, can I afford to do this? I'm going to counter you with, can you afford not to? Because a little upfront cost can save you a lot of long-term pain. I would like to thank Recon for giving me this opportunity to rant about fraud, which I am incredibly nerdy about, almost as much as I am about narrative. If you would like to catch me on social media, that is my handle there on most platforms. I am happy to talk with you through any concerns or questions you might have. Enjoy the rest of Recon!